All right, thanks a lot, Derek. Facebook stock goes public Friday. It's generating lots of buzz on Wall Street and among fans of the social network. But if you are a small-time investor, is it the right place to even consider putting your money? Can you do it? Stewart Welch joins us to kind of explain the process here. It's good to see you as always, Stewart. Thanks
Good morning,
so much,
Rick.
for being with us. Okay, so here's the deal. It's an initial public offering comes out Friday. $28 to $35 per share is the price point that they put out there. And you say the news today is that oversubscribed already.
Yeah, and actually they moved that price point up to about 34 to 38 bucks.
Yeah.
So it's what it sounds like. So there is a huge amount of buzz. Facebook's the largest social network site.
Yeah, maybe the biggest tech IPO ever.
It will be the biggest
Yeah.
tech IPO ever.
Yeah.
And so it's going to make Mark Zuckerberg the richest 28-year-old. He turned 28 this week. 28-year-old in the world. So that's some kind of cool things going on.
That's kind of cool. But folks, okay, there's a few things to keep in mind for folks that are sitting at home that have maybe occasionally play a little bit in the market and try to invest some extra money on the side there. They'll say, well, hey, can I jump in on this? Or people who don't even think about say, hey, I'm going to jump in on this. This Facebook thing looks like it's going to stick around. What do you say to those folks?
Good luck.
Yeah, exactly.
So here's the way it works. The allocations, the stocks get allocated among the underwriters, and the lead underwriters are JP Morgan Chase, Goldman Sachs, and Morgan Stanley. And then there's 30 others that have lesser positions, but those stock get allocated to them. What do you think they do? Wall Street insiders, what do you think they're going to do?
Sell it to Wall Street insiders.
They're going to divvy it up among their best
clients.
Yeah, so it's going to be,
money.
most of the money is going to go to people like the institutional investors, pensions, endowments, and their wealthiest investors. And so the average Joe's not going to get a shot at this until the stock actually opens up for trading. And that we expect that to be Friday. So it'll be chaos, I suspect, Friday. Lots of volume, lots of volatility.
And there's a thing, and you've got, I think it's the Buffett rule, or if everybody else is running there, you go elsewhere.
Yeah.
You hear a lot of folks will talk about that over the years. A lot of people are going to be piling on and say, hey, this is a sure thing. No sure things out there.
Not a sure thing at all. This is, if it comes out the way it looks like it's coming out, it'll trade for about 25 times revenue. And the average stock in the S&P 500 is trading for about 1.2 times revenue. And its number one competitor, which would be Google, is trading for about maybe 5 times revenue. So 25 times revenue, you're betting big on the future. Now, I'm not saying you shouldn't own a few shares, because it's an iconic company, and it'd be fun to do it. But I would rather have my serious money in really good, solid American companies, big blue chip companies.
All right, it's good to see you as always. Thanks so much.
Thanks,
Stewart.
Rick.
More to come on Good Day. Volkswagen makes a business